Oh, LD, what's going on, man? Haven't seen you in here before. It's good to have you, man. Good to have you. All right, we're going to start in about 20 seconds. We're going to start pretty soon. All right, let's go ahead and begin. All right, guys, welcome. It is Wednesday, September 8th, 2022. It is noon in New York City. Welcome to Checkmate Trading, high noon highlights. For those of you joining us in YouTube and Twitch, I will have links to our Discord on our video description. Go ahead and click that. Everything is free. There are no paywalls, no sub fees. We do this, for the purposes of education for all. Okay. So let's get right down to it. A lot of you in the Discord have been talking about the ECB rate hike. The European Central Bank raised their interest rates by 75 basis points. We saw EUROSTOXX rally 0.5%. With that news, I think the EUROSTOXX was already up before the announcement. I know a lot of people on Twitter said the markets are broken. They raised rates, this high, and EUROSTOXX is still up. No, if you think like that, your portfolio is going to be broken. No, this was widely expected. And so, it doesn't seem like anything has really changed outside of what was expected even a few weeks ago. So that's that. In other central bank news, yesterday we had the Beige Book release from the Fed. The tone is actually very different. I read parts of it. It looks like the Fed is saying that the economic activity that they're monitoring is stabilizing. That's the word they used, stabilizing, with a slower pace of price increases. Okay, very interesting that they would say that. So what are they really trying to do? They're going back and forth between this hawkish talk and this dovish talk. Or I guess it's not really dovish, more of a pivot talk. I think they're doing that on purpose. I think there's a lot of conflicting. They're watching TIP, TLT. I think they're also watching corporate bonds, and corporate bonds are still, relatively. It's still relatively cheap to issue corporate bonds right now. All right, and so they're seeing energy prices coming down, but yet credit still remains somewhat cheap. I mean, if you think that interest rates are high now, I mean, we're just where we were not too long. I mean, right before COVID. We're right there. It's not like it's not like we're much higher, like a historic high or anything like that. Literally, we're right there where we were back in 2017, 2018. Okay, we're nowhere near where it was before all this, before QE. Before QE, we were at more, 4 to 5% in the 10-year Treasury. So, right now at 329 or so, is that really that high? I don't think so. I don't think at all. All right. So I do think if they want to raise interest rates, they can. Will they? I don't know. And also, Vice Chair Brainerd, I believe she was on TV yesterday, and she said that at this point there's two-sided risk, and I guess it's too early to pull back on tightening, but it did sound as if she was trying to talk about the risks of the economy slowing down too much if they put on too much pressure in hiking interest rates. All right. So I don't know if that's a setup for a pivot or what. I'm not going to try to play 4D chess with the Fed. That's probably the quickest way of losing money in this market. But I think that's something to think about. And I don't think you should be very surprised if the CPI number comes out maybe a little bit cooler than expected next week, and then if the Fed comes out and starts talking about a possible pivot. I'm not saying that's what they're going to do. I'm not going to bet on that. But that's within the realm of possibilities. And if you guys have put positions or if you guys have put spreads still, that's something that you want to think about, okay? Maybe you want to manage some risk, take some risk off the table before something like that happens, okay? There's always another trade, guys. Just because you don't, get the full movement on a put spread doesn't mean doesn't mean that it failed. You can always, take your profits now and then reassess after an unknown event passes, okay? There's nothing wrong with sitting on your hands and having no positions. Having no positions is a position, okay? Keep that in mind. Wow, look at this. VIX just spiked up as we started high noon highlights. Maybe the algos have a spy tracker on my computer. No, I'm just kidding. I'm kidding. But it looks like a VIX is coming up and SPY's coming down. Some of us at the Discord talked about, if it taps 400, we're gonna buy puts. Well, I wasn't in front of my terminal for the whole morning. I've been in and out of my place, so I didn't really have a chance of doing this. I did notice though that we saw here my favorite signal, which is the 3 1-minute VIX green candles in a row. That's usually a good day trade signal to buy some puts, but I missed it. I was going in and out and preparing for this call, so I didn't really get to do that. So it is what it is. If you use Kelly criterion for your position size management, your day trades are not going to be very big anyway. So if you miss one day trade, so be it. No one trade should make or break you. Okay, just a little tidbit on risk management. We talk more about risk management on our Theta Thunder episodes, and I promise, guys, I'm going to get that out to you guys sometime this week. Again, this week's Theta Thunder is going to be about a trade that I have never lost money on since I've put it on since 2017. Okay, I'm going to share that with you guys. I'm going to share some statistics with you guys on why that trade works so well. Yesterday, we talked about the Japanese yen. Okay. Earlier this morning, I guess it's earlier. No, I guess it's late last night for us here in the United States. But early in their trade, we had some Japanese officials get on TV saying that they're going to have to, stop this currency movement, this volatility in currency, that they have to rein in, the Japanese yen and make sure that it doesn't just keep falling like this. And that doesn't seem to be working. So as I said before, I think the Japanese, the Bank of Japan, I think they've lost control of this currency. I think they've lost control of the yen. All right. However, good news coming out of Japan is that private consumption and business spending came in better than expected. So their Q2 GDP was revised up by more than what was expected. Okay. Although domestically they are seeing already some pressures to deal with inflation. All right. It's kind of I'm not going to say it's exactly the same as here in the United States, but there's some similarities. There's pressures to bring down inflation, but consumer spending is still very high. Business activity is still very robust. So I think that's what Japan's going through. I think still the unknown risk here is, what if the Bank of Japan does a complete 180-degree policy change? That it could be, and I think that's a risk that nobody is talking about. Nobody is talking about that risk right now. They're just reporting on what's going on in the yen, but nobody's really further questioning what could happen if inflation gets out of control in their domestic country. Now, what people are starting to talk about, what we talked about since June, is emerging market credit risk. I actually finally found something on Bloomberg. Somebody wrote something last night on Bloomberg, one of the writers there. It's the first article I've seen out of a major news outlet about emerging market risk that is looming, and a credit risk in emerging markets. We're starting to see that now. Okay, now the media is now starting to report on that. I still think that the big implosion is still a ways off. I think it's going to probably happen more around 2023, possibly early 2024. We will see. If we see a big enough rally in equity markets next year, I think that's going to be a very good area to start legging into some long-term EEM puts. I tried doing that earlier, and then I think that and my FXI, I had to get out at break even because we saw some volatility in emerging market currencies and some risk on currencies. I think I was also using Australian dollar at that point as a signal. And then, so that, I think we were a little bit too early when we started then, but I do think that, if we do see a little bit of rally in 2023, I think that would be a good spot maybe to get into EEM. I told you guys this last week and earlier this week. It's not just Sri Lanka and Pakistan anymore. We're starting to see now cracks forming in Argentina, and Latin American countries, Southeast Asian countries, Thailand. We're already starting to see problems in Tunisia. Egypt now is in that mix. Egypt has been, it's always been an issue with them because they import a lot of wheat, and wheat prices have been going up. A lot of emerging market debt comes due in mid and early 2023, and I think that's where all this dollar buying has been coming from. All this demand in the dollar, I think, is coming from emerging markets. Oh, look at that. Actually, just a couple minutes ago, we were negative, and now we're positive. Or, maybe an hour ago, we were negative, and now we're positive again. Look at that. And SPY is selling off. Look at that. I even talked about buying some puts when it hit 400. I even had an alert, but I wasn't in front of my computer. I could have done it on my phone, but I was like, whatever. It's probably not going to do anything. And look at that. That would have been a good payout. That's unfortunate. Oh, well, it is what it is. Again, Kelly Criterion says that if you got a volatile payout structure like this, you have to keep it super small. When I do a 0DT, just for reference, I don't know what you guys do. You guys are free to do what you guys want to do. But when I do a 0DTE gamble, I usually keep it to less than 0.25% of my portfolio. Okay, 0.1, 0.2 at most for 0DTE Lotto. Okay, I'm not at a stage where I need those big gains. And actually, once it sounds counterintuitive, and you don't have to take my word for it, but ever since I started doing less and less shorter dated options plays back in 2017 or so, that's actually when my equity curve started going up. It's not really, your entries and your, rate of return per trade is not really what determines most of your success in trading. In my opinion, what really determines your success in the long term is how well you manage a position that goes against you. Okay, it's really limiting your losses. That's what really helps your equity curve in the long run. That's just my take. That's just my opinion over decades of trading. Believe me, I've made every mistake under the sun. I started trading when I was 13 years old, so I've been doing this for like over 20 years. I've made almost every mistake under the sun. Okay, believe me, and just over the decades, that seems to be what works, at least for me. Okay. But that's the dollar. Let's actually take a look at the euro. Euro's in the news a lot. I know briefly, we were above parity and now we're losing it. So those of you in Europe, well, I guess if you make dollars and you live in Europe, congratulations. If you make euros and you're spending dollars, I feel bad for you. Right now, euro is coming down. Let's see if is EUROSTOXX. Oh, EUROSTOXX are losing a lot of its gains. Okay, well, it is what it is. All right. One of the things I wanted to go over too was premium selling. Again, this is something that we go over more in Theta Thunder, but because I did this today. UUUU, our uranium play, I did sell So, just so you guys know what I did. I never hide anything from you guys. I always share all of my positions, whether they're wins or losses. You see it all, okay? I don't believe in just showing my wins. You can go to Twitter and you can find all these people that have these like huge wins, 500. I once saw this guy, he put like 8 trades in a row with over 1,000%. 1,000% wins, but then when you go into his Discord and you look at his live trading, there's like 5 or 6 other losses that he took, but he doesn't report that on his Twitter. But hey, that's I share with you everything. If you see somebody that always just posts wins, I would run away from them, okay? Because inevitably you're gonna lose some trades. It's part of the game. It's how you manage that risk. That's what we're paid to do as traders, all right? But anyway, on UUUU, I did sell the 8 strike calls for 15, and then with that premium, I took that premium and I bought the 6 puts for October. Okay, so I'm doing a calendar collar. Okay, it's a collar. Protective collar is when you sell a covered call and you buy protective puts with that premium, but instead of using the same expiration, I went out just a little bit more. Okay, so I have that just in case if it drops. If it does drop, I cash out of my hedges and I buy more shares. Okay, and this is how I compound the number of shares I have for long-term holds. All right, I do think that there's going to be a nuclear renaissance. That seems to be the term now. Nuclear renaissance. I do think it's going to happen. A lot of people are saying that it's already priced in. I don't think so. I don't think it's actually that priced in. We did see, we have been, of course, if you look at URA, which is the uranium ETF, as you can see, it has more than doubled since, where is that, 2020 or so. And then we've had a period of consolidation. I don't think this is it. Right now, I think this accounts for the doubling of uranium prices. Uranium prices were at all-time lows, and then all of a sudden, uranium prices started ticking up. I don't think we've seen the highs in uranium pricing yet. I think we're just seeing uranium prices really start coming up, and uranium demand really hasn't picked up yet. If you look at the earnings reports in all these uranium miners, they're just starting to get long-term contracts. And again, as energy prices remain high and countries around the world look to get a more stable and more secure energy source, I think a lot of them are going to get friendly towards nuclear power. Okay, it's just relying on a government that is belligerent. When I'm talking about Russia, for natural gas, I don't think is a good long-term solution for a lot of countries. And I think a lot of countries are turning around to that. Germany has already kept open 2 of their nuclear power plants. They were supposed to get decommissioned, but apparently 2 of them are going to stay open just in case. Now, here's another thing that I heard. I don't know if this is true, and maybe you guys can help me. I tried to do some research on this, but I just couldn't find anything on this. But a few reputable sources I know told me that even the decommissioning of those nuclear power plants, they still haven't gotten the official paperwork to decommission those in Germany. That's just what I heard. I don't know if that's true or not. I can't find any good government sources, straight, first-hand sources of that. So if you guys have any first-hand sources, or for some of our friends in Europe, if you guys have better clarity on this, I'd love to know. So let us know if you guys hear anything, especially our friends over there in Europe. Okay, so that's uranium. Since we're on energy, we might as well take a look at what's going on in oil. Oil coming up. I think this is just a little bit of a relief rally after the big sell-off yesterday. There is news from Saudi Arabia that they are lowering the price of their benchmark to Asian customers. Because, I think partially it's because China has been slowing down their oil purchasing. They're actually still dealing with all the shutdowns, Chengdu, Shanghai area. All the lockdowns are not. They're not getting rid of those lockdowns at the pace that was first expected, and they're not really loosening any restrictions. that could be an issue. And I think this morning, some Apple suppliers were on the news, and they said that if their area, if restrictions don't lift in their area very soon, it could affect iPhone manufacturing. I don't know. I don't know if how much truth to put into that. I'm sure a company like Apple has other sources and other methods in their supply chain to counteract that. We will see. Okay, we'll see. Let's see what Apple is up to today. Apple down and accelerating to the downside. Okay, we'll see what happens. So that's crude oil. Let's take a look at natural gas. Natural gas coming up. We have seen some extreme weather, especially here in the West Coast in the United States. We're seeing some extreme heat. Actually, yesterday, I live in Los Angeles. I know in the high noon highlights, I say, oh, you know, I always quote the time and East Coast time just because the exchanges are there. But, you know, I live here in the West Coast in California, and last night we had a series of quote unquote brownouts where the power kept going in and out. And there, I believe, not yesterday, but the day before was the highest demand of electricity in California on record. All right, just because we've been having this record heat, 100, 110 Fahrenheit heat, and that puts a lot of strain. I'm not sure if that's the reason why we're seeing a little bit of a pop, or it could just be a dead cat, you know, with the huge sell-off. But oh, that's a huge move, by the way. That's over a $10,000 per contract move. But anyway. I think if we still keep seeing extreme weather and demand for power keep going up, I mean, this could still go up. If we have a very, very harsh winter, I mean, we could see this keep going up too. It touched 10 in June. I said it could touch 10. It already did. We'll see. We'll see what happens. Okay, so that's energy. Metals, gold. I'm still waiting for gold to touch this 1680 or so, and I will do a quick long right there. I will get rid of my long at around 1800 or so. All right, so this is just for a 100-point move. I will be buying either call spreads, or I might even just buy the futures outright. Okay, I'll let you guys know what I decide. It just depends on what the skew looks like on the options market once we get to that point. All right, but that's what I'm looking at for gold. Copper. Copper is coming up. It made a lower high, and now it's coming up. Will it make a higher high? I'm sorry, it made a higher low. It made a higher low. Will it make a higher high? Interesting. All right. Actually, let's take a look at our metals indicator. We have some indicators in metals. You guys remember these, right? This is our risk on, risk off from the metals market. It looks like we're seeing a little bit of a risk on from commodities markets. When this comes down, it means there's more demand for industrial metals over the store of value. So that's usually a risk on signal. When it goes up, it's usually means risk off. That means store of value has more demand than the industrial metals. Okay. Although I don't like looking at the daily chart for that. For most metals, I like to look at the weekly or monthly charts. Okay, because cycles tend to be just a little bit longer on metals and commodities. So it looks like that, you know, if you look at the monthly chart, it still looks like we're still at the local highs here. We still haven't really budged all that much. We'll see. This so if we flip that ratio, instead of gold to copper, if we say copper to gold and then we multiply it by 1,000, that's usually a very good indicator for the 10-year treasury. Well, it was ever since 2005. Ever since 2005, it's kind of tracked, and it's been a very good indicator of what the 10-year treasury rate is going to go. We are seeing it fall. Usually it does move about a week or two before treasuries do. I just find it quite odd that next week we have this big CPI report, and now we're seeing a divergence already happening from about a week ago. And that 2-week mark comes around, 2 or 3 week mark comes around next week. So will this come back down? Ooh, who knows? Who knows? I don't know. After the CPI report, who knows? Maybe this comes down, yields come down. If yields coming down, that's going to be good for stocks. Okay, that's going to be a risk on signal. All right. We shall see. I can't tell the future, and neither can you. All right. Move index. This is the volatility of the bond market. It is still elevated. We're still, in an uptrend on that. Okay. We're still in an uptrend on that. There's really nothing much to say about that. There's still a lot of volatility. Whenever we see a lot of volatility in the bond, in the move index, we usually see the VIX spiking up too. So maybe that's where this is coming from. Maybe the VIX is just catching up to the move index right now. But we'll see. ZF, our 5-year Treasury note futures, is still on its way down. Again, if this is coming down, all right, if this is coming down, dash for cash, okay? The interest carry trade is very favorable and holding cash if this keeps going down. If this keeps going down, there is an alternative. Investors and large institutional traders can take money out of the market and put it into different money markets and get a respectable yield. Okay, if this comes up, however, then cash becomes trash. All right. I think if you really want to see the VIX come up, you have to have cash is trash, because if cash is trash, then institutions don't sell; they'll just hedge using puts. All right, but if there's a dash for cash, then instead of hedging with options, they're just going to sell shares. All right, and that's what we've been seeing. We've been seeing that throughout the year, wherever institutions, wherever that hedging level is, wherever there's quote unquote resistances, instead of seeing hedging demand, we actually saw shares getting sold. If you look at the dark pool purchases and sales, we've seen a lot of large block sales happening at certain levels instead of hedging. So VIX has been kind of muted because of that, and I think we need to see this turn, and we need to see the dollar come down a bit for a risk event to cause the VIX to actually make a large move. Okay. TIP-TLT. Wow, it was down. Wow, the TIP-TLT really amazes me. I mean, it's been making some really big moves. Okay. That is just not common. If in more stable times, of course, after 2020, bond market has not been stable since 2020, pretty much. But if you look at more stable times in the bond market, those kind of big candles are not very common in TIP-TLT, because it takes a lot of money to move this. Well, first of all, it takes a lot of money to get involved in this trade. This is an actual trade, by the way, this ratio trade, buying one and selling the other. It takes a lot of capital to do it, so it's usually institutions that do that. So it takes a lot of money to move it like this. And we're just seeing these really big movements and big candles in TIP-TLT. And as long as that's the case, as long as the candles are big like this, I still think that the move index is going to stay elevated as long as that happens. All right. And if it's actually funny. A couple days ago we talked about these outside day downs. Outside day downs, we saw 1, 2, 3, 4, 5, 6, 7. After 7 or 8 candles, it gets smacked down again. Right here too. 1, 2, 3, 4, 5. This one only took 5. But that's something that I've just noticed. Right here we had an outside day down. 1, 2, 3, 4, 5, 6, 7. Boom. But the thing is, every time we had that outside day down and I guess a retrace, it always get back down lower. Retrace here, retrace goes lower than the initial move. We're not seeing that here. I guess this time it could be different, right? Maybe. I don't know. Maybe it continues down into the next couple of sessions. We shall see, but I think you should keep a real good eye on this. I think before the CPI report comes out, if it loses this purple line right here that I drew right here, if it loses that before the CPI, I think that means that the expectation is that the CPI is going to come out low, or we're going to see the CPI cool off a lot. I think if this comes down, okay, it tends to be TIP-TLT predicts those events quite well. Usually, all right. If you go back throughout history, I'm not saying just recently. If you go back throughout history, years and years and years of this, usually TIP-TLT is very good at predicting the lagging indicator. CPI is a lagging indicator. That's a 3 to 6 month lagging indicator. All right. TIP TLT is forward looking, and it's quite accurate. All right. Now, if this cuts up and makes new highs before the CPI report, oof. I mean, I don't know. I don't know what that would mean really. But I would suspect that the equity markets would not like that, especially NASDAQ, especially tech stocks would really hate that if this made a new high, if this just kept going up. We'll see. Let's see what happens in the next couple of sessions. Let's see what happens on Friday and Monday, okay? I don't want to run to conclusions yet. HYG, our corporate bond ETF. It rallied and now it's coming back. Will it end negative for the day? It looks like it could be the case. Let's look at our junk bonds AD line. I always post this every night on Discord. Right now we did see a large increase. However, day to day is not important. What's important is the longer term trend. In order to really see this curve up and say, okay, it's curving up, I want to see 4 days in a row of positives, of advances over declines. Remember back in July? Oh my God, guys, when I was taking a look at this, remember back in July, I said, oh my God, there's 4 days in a row of advances. When was that? July 11th, I remember, right? Yeah, 1, 2, 3, 4. And then before that, over the in beginning of July, end of June, into the July 4th week, we had also 4 days. No, we didn't have 4 days in a row of positive. It was the day after July 4th, it was a negative. And I said, ooh, it's not 4 days in a row, but because, generally volumes are really low the day after a holiday like July 4th, especially in the summer, I said this could have been a one-off and, this is all positive. Remember when I said that, and we saw the signal very clearly from this? Guess what happened? Guess what happened after that signal? That was literally, it marked the low. That was July 11th. So, if you took that July 5th as an anomaly, all right, you would have gotten in around, around here or so. All right, but if you waited actually for the full 4 days, 4 days of actual readings, you would have gotten in around here. All right, in the big scheme of things, that would have been a very good entrance right there. So it showed us that liquidity was improving, all right, ahead of time. It gave us that signal like what? About a week or two before, depending on where depending on if you count that July 5th as an anomaly or not. If you do, it gave you, you were about a week and a half early. If you waited for the full 4 day signal, you were just 3 days early. And then we started this massive rally, okay? I think our junk bonds ADL is a very, very good indicator. So I'll be monitoring that. But right now there are no signals. I would not count just 1 day like this as a positive liquidity signal. Again, if 3 days more in a row, if today is also positive, Friday's positive, Monday's positive, ooh, then hey, that's the start of that might be the start of a Moab, the mother of all buy the dip signals, okay? And again, the Moab would be if we make a higher low in the junk bonds ADL line. And again, we need three or four more positive sessions in a row for that to happen, starting from, so yesterday was positive, so we need positive today, tomorrow, and Monday in order to really determine that, okay? New York Stock Exchange high-low line, this is something that we've been plotting for a while. This also has to turn up with all the moving averages turning up as well too. This has to get above that 20-day EMA. And all the shorter term EMAs, the 4 and the 9, also have to curl up too. If that happens with our junk bonds ADL line making that higher low, then that would be the Moab right there. That would be the mother of all buy the dip signals. But we're not seeing that. Again, the junk bonds ADL line is not there. New York high-low line, not there. It's actually decreasing, okay? And actually, if you look at today's high-low is negative too. So if we close around here, that's further going to push this line down, okay? So still not good, all right? Liquidity doesn't look like it's improving at all, okay? So far, okay? But however, I will say that the advanced decline on the New York Stock Exchange did make a positive yesterday. Now, of course, that could just be a little dead cat bounce. It may be coming back down. We shall see. SPXEW, this is the S&P 500 equal weighted index. I just want to show you guys this. What is this? I use the free version of everything, guys. I use the free version. You guys, you don't really have to pay for information. There's a lot of good free information out there. Although there are some data that we would like to get that is quite expensive. But for the most part, a lot of that good information and a lot of the stuff that we use as indicators, it's out there for free, guys. You just have to know where to look. But anyway, this is the S&P 500 equal weighted index. I mean, this 50-day moving average seems to be really clean. I mean, yesterday's movement and the equal weighted index literally closed to the tick to the 50-day moving average, okay? And now it looks like we're going back and forth between that and the equal weighted S&P 500 index, okay? I think if we lose it and we make a clear breakdown, I mean, we could see us retesting those lows in the S&P 500 if we lose that, I think, okay? Because this is equal weighted. It's not market cap weighted. So that means more and more stocks are participating on the downside than they are to the upside if this starts really losing it, okay? So keep that in mind. And, you know, the New York AD line coming down, that also supports it too. And also with our high-low making this, I mean, that all kind of lines up with that view, okay? So again, let's watch and observe. Nothing else has changed. None of my other plans have changed. Some of the plans that we haven't talked about in a while, I guess Ford. I'm still waiting on that 1380 zone to buy Ford. It's just not happening. And then HUT really came close to our buy level. Remember 165 or so? Literally yesterday. Oh my God, less than 10 cents away. And it just didn't happen. Now it's rallying. Hopefully, you know, it comes down. Maybe it does. Maybe it doesn't. I don't know. I have my buy orders ready just in case. Ethereum and Bitcoin, same plan. You know, I'm still waiting on that ETH to gold ratio to get to this level so I can buy. If it doesn't happen, you know, I will nibble at around 1230, 1240 or so. I may just nibble a little bit, but still wait for my big purchases for the ETH gold ratio to get to around 0.55 or so. All right. So that I still haven't changed my plan regarding that. PPC, I bought it at 28.50. I mean, we are underwater on that by just a little bit. I was hoping that it would go back to up to like 28, 29 or so I could sell some covered calls and buy some protective puts, but it is not really, you know, it's not really cooperating. I should have just sold covered calls when I first got it and saw the initial bounce, but I didn't. I was too finicky with my, you know, and I was too strict with the pricing that I wanted on those covered calls. Looking back in hindsight, though, I should have just moved it closer to the bid and got a fill. But hey, you know, there's no such thing as a time machine, right? So it is what it is. I'm still holding on to it. We'll see what happens. Okay. What else? Tesla is also part of our plan. We haven't talked about Tesla in a while. Oh, where's my line? TradingView always does that. TradingView. Why does that happen? Okay, maybe it's on my TOS. Does TOS? TOS. Okay, good old TOS. Always reliable. TradingView. Ugh. You know. I guess you know, the only way I'll talk good about TradingView is if they sponsor me. Okay, so okay, so here we go. Here, I'm still gonna short at this red line right here. Okay, nothing has changed. We got to this right line, I buy some puts. Okay, nothing has changed in that plan. All right. Will we get there? I don't know. I have no idea. Okay. So that's what I'm seeing. Oh, you want to take a look at some of the other indicators? I forgot to go over this, but what's going on TradingView? Okay, so yes, we're still, you know, not much of a signal. We did see the 30 and 10 year go up, but I don't think it's much. I think that might be just a dead cat bounce. You know, we may continue downward. I think if this keeps going down and makes new lows from here, I think then you know, we might see a little bit more quote unquote pivot talk come from the Fed if this keeps going down and makes new lows. That will take time, of course. I don't think that if that does happen, it'll probably happen around November, December or so. Bonds just don't move as quickly as stocks do. 10 and 2, profitability of banks. It did recover a little bit, but it looks like it's giving up some of that today. How is FX or how is XLF doing? Oh, there we go. So it's already losing that. This definitely is correlated to the profitability of major banking centers. You know, your major banks like Bank of America, JP Morgan, Wells Fargo, all those banks, those big money center banks, this affects their profitability a lot. Okay, this being inverted, not good for them. Not good. Okay, they want this positive and they want it to go up. We'll see. All right. Cryptos. Let's get to cryptos. One thing I noticed in cryptos is that we've been seeing some block orders for premium selling on both call and put side. It looks like right now they're selling put spreads. I believe this is a put spread, right? 1336, 1336.06. Yeah. So it looks like they're selling the 1700 puts, buying the 1300. So $400 wide put spreads for a net credit. That's a pretty big net credit right there. It's about $500,000 in net credit on that one trade, on that one spread right there. It's at 2,500 contracts, 2,500 spreads. So we're seeing this guy again right here, same thing. This might be the same person or same entity. Again, about $500,000. So about $1 million right here, just in this 1,700 and 1,300 put spreads for December. We're also seeing right here put spreads. I believe puts are getting sold. Actually, no. This one looks like it's just a put standalone for March. So for March puts, to 1,600 puts. Is there any matching? Deribit, if you're not an account holder, they make it very difficult for you to organize this data. Let me see here. 106 and 1255. 106 and 1255. Oh, what is that? Another sell. That is on the call side. 1255.59. Was that the same? 1259. So somebody sold a strangle, it looks like. Puts. And so, okay, so the important thing is there's a common theme here. Premium selling. All right, premium selling. Some calls being sold too right here. That's a call spread, I believe. That's a call spread being sold, right? 2,500, yeah. 2,000 to 2,500. 2,000 to 2,500 right here. Right here. No, the timestamps don't match up. Timestamps don't match up. Right here. Yeah, right here. Oh, no, those are buys, though. I wish they let you do this by time, but they don't. Let's see. Buying 1315. Is that a buy? 1315? No. But anyway, if you actually look at the major trades, the bigger block trades, they are all net premium selling. All right, premium selling happening. So what does that mean? It is actually flipping the gamma exposure of market makers. Remember how we saw that like from 1,500 on down, we saw huge gamma negatives. Now we're starting to see some gamma positives, and we're starting to see some of those other strikes get positive as well too. So 1,450 is still, I guess it's still negative, 1,500 and 1,450. But I noticed that from yesterday, there's a lot more positive gamma exposure now on certain strikes in Ethereum compared to yesterday. All right, and again, these services, they don't let you go back in time and look at previous data. And in order to be an account holder as an individual, they don't allow Americans. So that makes it very difficult to track all of this. But from my memory, I don't think that the gamma exposure was this high in ETH on these strikes. So as you know, as institutions are selling premium, that means a market maker is buying that premium, so that puts positive gamma into their inventory. Okay, something to keep in mind. So now they got positive gamma. We still got some negative gamma though from 1500 on down. I still think just based on positioning, if we lose 1500 and we close under 1500 for a few sessions, especially before that September 9th expiration, we could see a little bit of like a spike down. It could be like a wick, like a big wick down that has a quick recovery. It could be possible, okay? And that's tomorrow. So who knows? We might see some action tomorrow. It's been for the past few weeks, we've seen some crazy moves on Fridays. So that's not outside of the realm of possibilities, all right? Definitely not outside of that, okay? Let's see what else. As far as that, I don't see any other big changes. I just noticed that a lot of premium selling is happening now from the large block orders on December and March as well. I wonder if that's where all the premium is. Actually, whoa, look at that, 1,500 puts. 1,500 puts. But a lot of that, I think, is coming from retail. A lot of that is coming from retail, though. Okay? Let's take a look at those 1,500 puts for tomorrow, of all places. So I don't know if there's anything going on tomorrow. Is there like some news event in crypto that's happening tomorrow? 1,500 puts. Yeah, some major volume coming in. Large OI too. Look at that. Wow, 11,000. I mean, there's 23,000 here. That's call side. I'm sorry. Puts is here. 27,000. Look at that. Wow. It's a huge OI right there. So starting from right here. So, I think that's where all the negative gamma positioning for the market makers is right there. Okay, right there. What is it trading at? 1628. Okay, so there's a little bit of a buffer. There's about 128 point buffer. But we know from crypto trading, you guys know that are hardcore crypto traders. You guys know 8 to 10%, definitely doable within a couple of hours or a few hours in crypto space. So just watch out. Manage your risk, guys. Just manage your risk. Okay, if you guys are day trading this, just manage your risk. All right. Any other things you guys want to go over? Anything else? Any questions, comments, rude remarks? All right, then. In that case, guys, thanks for joining me. Thanks for watching. Again, in our description box down below the video, I have links to our other, social media sites. We're on Twitch. We're on YouTube. We also have a podcast. We're on Discord. The Discord is free. It's free to join. We have many different traders, not just, traders who trade like me, but we've got also active day traders in there, people in different markets. We bounce trading ideas with each other. No paywalls, no sub fees. We do this purely for education. Join us. Join our group. We'd love to have you. Tomorrow is Thursday. We will do another high noon highlights no, tomorrow's Friday. I'm sorry. Tomorrow is Friday. So no high noon highlights until next week, Tuesday, Wednesday, Thursday. And again, either tomorrow or over the weekend, I'm going to publish the second episode of Theta Thunder. And again, that episode is going to be about a trade that I have never lost money on. It's a 100% hit rate on wins, and I'll share it with you guys, and I'll share some statistics and some data with you guys on that one. So stay tuned for that. We might also talk about UUUU on that one as well too, since we're selling premium around that position already. So stay tuned, guys, and thanks for tuning in.